No, because I think what the other side of it is what's happening on the demand side to the world economy. And the most important meeting that's coming up is going to be the G-20 for the oil market, not the OPEC meeting, because the question is there going to be a China-U.S. trade deal? And that, I think, will actually be more significant for oil prices right now. But obviously, if the tension increases, if there are further actions, you'll see an oil market that will start to react.
Why do you think that trade and demand is more of a factor than Iran, which is such a major producer? I know it's largely not shipping oil
right now,
after the sanctions, but why is that not? I mean, traditionally, that would have been a huge mover.
Well, Iran, as you say, is a major producer that right now is not a major producer. It's barely a minor producer. And it's because if you look at what's happening to world demand, this year we see supply increasing by about 1.5 million barrels a day just from the United States, and demand has really decelerated, and it's only going to grow by about 1.1 million barrels a day. So that's what's kind of holding things steady while we see what seems to be a crisis and a breakdown in a system to deal with it.
In terms of the Iran tensions, what have we learned in the last couple of weeks about the importance still of the Straits of Hormuz, whether there are any alternatives or whether that will remain as crucial to oil trade as it has done for decades?
For many decades, as you say, it has been a key point. Things have somewhat changed with the growth of U.S. supply and elsewhere, but about 17 to 20 million barrels a day of crude oil and another 3 million barrels a day of product move through it. So you're talking 20-25% of global supply. And if it were disrupted, which is actually hard to do, but if it were disrupted, you only have about 7 million barrels a day of pipelines to move oil away from the region. So the Strait of Hormuz has been a choke point, as it's been for decades, because of the volumes of oil that pass through it.
Gressa, where are you on the energy stocks?
So if you look at XLE, now we're talking large integrated names. Obviously, you can make some money in these names. They're up 11% year to date. But if I asked you what they're up or down in 5 years, you probably wouldn't get the answer right. They're down 6%. They've done nothing forever. The U.S. is out producing Russia and the Saudis. It's not about oil anymore. Iran is about nuclear weapons. It's not about oil. That's why the market doesn't move on it anymore. We're not dependent on foreign oil anymore.
Well, we are somewhat dependent on foreign oil. We still import some of our oil, but our imports are down from 60% to about 15%. But it is striking, as you say, there's like 4 million barrels a day of oil that's out of the market from Iran and Venezuela. And look at prices are lower now than they were a year ago.
Dan, what is your year-end forecast for Brent and WTI?
Well, we're using it as an average price for this year, and of course it fluctuates with events that no one knows where they're going to go. Around 67 for Brent and around $59 for WTI.